Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hanks. Retail is in focus this week. Today is, of course, no exception. Target is going to be the subject of our cash tag segment. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Landon Swan back with us as well. Target seems to be kind of the unique player in this space that is both dominating kind of the in-person, in-store. The experience is very much well received, but they're also doing really well on e-commerce. So I think that makes them kind of, in many ways, and I can't wait to hear the data and what the social sentiment is, but I think that kind of the winner right now.
Yes, I completely agree, and I think data would show that, at least from a price activity standpoint. They hit new all-time highs last week. The stock is up almost 50% year to date. Plus, we saw really the fact that Target has a ton of cash at hand, and they're really continuing their tear over the last 4 quarters, which we have seen in now back-to-back earnings reports, really showing strong sentiment, especially actually following peer Walmart, who reported strong second quarter earnings and sales, and all of this sort of in light of the fact that their online orders actually softened this quarter, just going to show really how strong this business is. So this, I think, has boosted expectations for Target as well, who report second quarter tomorrow, before the market opens, of course. Now, U.S. retail sales today fell more than expected in July, which is one possible concern, but of course that won't be in this most recent report. So they've grown about 20% annually every year, which is very strong, but it's also made the stock relatively expensive. But I have to argue there that right now it seems like in the markets, everything is expensive. Now, CEO Brian Cornell actually noted in the last quarter that they're sort of increasing their guest that shops across multiple categories, meaning that they're sort of boosting their presence as this one-stop shop. And just from knowing people that love and shop at Target, I completely agree. It's sort of where you right now go to get everything. Now, what has been really impressive for Target, like Alex mentioned, is sort of their omni-channel presence. Their curbside pickup and same-day deliveries were up 235% last year. Now, comps last quarter were just over 5%, and next quarter they're expecting between 6 and 7%. So this is a pretty high bar for Target now. But what they have done very well over the last few quarters is they're growing their in-house brands, which has sort of, I believe, boosted their identity against a Costco or a Walmart. And in the last quarter, their Target-owned brands grew by about 36% to now they have 45 owned labels. So that, to me, is a bright spot ahead of this report. And I had to showcase a tweet from Jeff Mackey, who is a known retail tweeter, and he's been talking a lot about Home Depot, Walmart, Target. So that's our first tweet of the day, which says, Target makes new all-time highs despite remaining a largely forgotten underdog story. And an upgrade. Some people have heard of Target, I guess. So obviously ironic there. His earnings next week, I think Target is moving a lot of clothing. I don't know if that's pricing completely. So I like that he mentioned this sort of clothing, which is, again, apparel seems to be right now very much a strong suit for them. However, with the stock at all-time highs last week, I would argue that it could potentially be priced in. But our next tweeter today focuses on maybe some more negative sentiment surrounding this earnings report to keep things sort of balanced and fair, which says, I think the biggest challenge for Target right now is staffing. The local Target is terribly understaffed and sometimes can't even open a register, and only the self-checkout lanes are open. Employee shortage is rampant in this area. So this is, I see this honestly everywhere at grocery stores, retailers alike. And I think this is just sort of the broader issue right now. We see this in Uber where we can't get rides. But Landon, often we compare Target to some of its peers, Walmart, Amazon. So I have to imagine that in terms of happiness, Target is a better experience than Walmart, just from the things we've all talked about. But I'm curious really how last mile delivery plays into this, because I think that right now is sort of the key to winning over your customers.
Yeah, Target, you nailed it. I mean, Target's happiness is definitely higher. It has been for a long time. I think it's 64%. Walmart's at 50%. It's no contest on happiness for Walmart. They have that sort of a stigma. They need to clean up their stores a little bit. Target's got a great experience, all that. But yeah, you're right. The digital, the omni-channel, the shipped, curbside, digital, all that is doing really well. You mentioned their blowout year last year. Of course, 2020 is going to skyrocket in those categories when you can't go into the stores or a lot of them are closed. But actually, our data is showing that if you combine ship data, delivery, and curbside, it's actually higher than 2020, which is an incredibly high bar. So they've got very strong stickiness when it comes to that. 95% of their transactions are handled by their stores. So they're able to, we always talk about the distribution centers that are stores that Target and Walmart own, as opposed to Amazon. They're able to get things in people's hands very quickly, either same day, next day, or if you want it in 20 minutes, go pick it up. So they're doing extremely well, and they've changed behavior on that. Also to note, back to school mentions are up 92% year over year. People talking about back to school shopping. Of course, last year was a down year because there weren't a lot of schools opening, but you needed some supplies. But now, just as Mackie talked about, apparel is going very strong. That's one of Target's strong suits. Of course, you got electronics as well driving that back to school. So Target is really well positioned. If you look at our data overall, we had them, we're I would say neutral on Target on this earnings report, but the fact that they're down a little bit today, maybe it's because of the markets. But after Walmart's report, we had them, actually our earnings score was a little bit stronger on Target than it was on Walmart. So seeing how well Walmart did on the numbers alone, not the stock, has me maybe leaning slightly bullish going into this report since the shares are down today. I kind of like that. I think that maybe they're positioned to surprise any sort of doubters today. But, one thing I'm kind of curious, get your guys' take on, Kevin, maybe you could help me out here. Target being down a little bit today after Walmart's strong earnings, is this sort of a overall market effect, or is there something tying in with Walmart and Target that's pulling those shares down?
Landon, I think this is just another example of stocks in a sector trading off any news in that sector. And I think whether you want to admit it or not, Target is retail, so is Home Depot. And let's face it, the whole retail sector is down today based on Home Depot's good earnings, and it wasn't good enough. And we've been pounding the drum on this show for the last week or so, how all these retail stocks were overbought. Now, here's the good news. If you're trading Target or looking to trade Target today from a bullish perspective, you're getting a stock on sale. It's almost making its move today, which does that. But the main thing is, I think for Target is, I don't think, obviously we all know, we reported on it for several quarters. This was a kind of a surprise pandemic is how much it shined, through the other names. But Landon, here's my question to you. I think the Target Walmart comparisons are thin in terms of correlations. They're both retailers, but Walmart is definitely more of a consumer staple retailer, where Target is more of a premium merchandise retailer. So the fact that Target is doing better, although not today, it's down with the rest of the sector, you may have some hope that you can bet on because of they're really got, and Jenny Horn has mentioned this, she'll go to Target, she won't go to Walmart. There's a lot of people like that because they don't sell the same products. Target sells a level of product, one level, or maybe even you could say two levels higher than Walmart. Landon, aren't we missing when we try to compare these two? Because they're both big box, but they're selling two different things. I'm interested to hear your thoughts on that.
Well, I agree there. I mean, I can't remember the last time I've been to a Walmart. I go to Target often. But I think you're right. I think that many of the products are the same, like if you get down to the staple type stuff. But when you get into the more discretionary, it is a level higher. And I think that's reflected in the consumer happiness. I mean, for two companies, if your hypothesis is that two companies are very similar, and one of them has a happiness of 50% and the other one has a happiness of 64%, that tells you that maybe they're not so similar, or one of them is executing way better. Now, I don't think that Target is executing that much better than Walmart. I think they are a little bit, but I agree that the products are a little bit higher quality, a little bit higher price. So it is a different experience. I think that Walmart focuses more, when you're talking about the differentiation of beyond the basics, they're more into the grocery sector, whereas Target's into apparel and electronics, sports, home decor, things like that. and now getting into beauty with the Ulta partnership. So I think that you're right. There is a little bit of a difference there, but we can also look to Walmart's earnings and Walmart's reports as to how maybe Target may be going, because I mean, they're both huge stores and they're very similar. You know, Walmart talked about how people were coming out of hibernation. They're not stockpiling, so I think that there's a lower fear of another shutdown, and that the number of transactions were up while the price per transaction or the sale per transaction was down, indicating that people, instead of going every once in a while and having huge orders, they're getting back into the normal rhythm of shopping on a regular basis. So, you know, I think Target's well positioned, as we've seen, to handle any kind of shutdown. They're going to thrive in that environment, and they're also obviously well positioned to handle reopening. So I like them going forward, especially if they're going to be down a little bit today. I think that's a nice little discounted price. Again, earnings score neutral from LikeFolio, but at, you know, taking a little bit off here on the share price, I like them a little bit more than I did yesterday. That's for sure.
Yeah, and Landon, I think you make a really good point where these names are all sort of pandemic proof, because we saw them thrive in a time when so many other of these smaller sort of mall-based retailers absolutely crumbled. And of course, being that a lot of them were deemed essential business, they were able to stay open. But I kind of like Kevin's comparison of, you know, you maybe can't make the comparison of Target to Walmart because, one, I think they attract two very different kinds of customers, but also the size. I mean, Walmart, I think, has like 10,000 more stores than Target, at least nationwide. So that is something to consider, that Walmart's scale is just so much more massive, which then kind of justifies maybe their quality control at their stores when there's just so many more of them. But my question is, what about Amazon? Because this is always what I think of when I think of Target, that I'm shocked at how well they've been able to fare themselves. But I actually think being a brick and mortar and having this physical retail presence has been a strong point for Target.
Absolutely. It's huge. I mean, they've got the ability to get things out to customers far more quickly. And frankly, I think that Amazon's been dropping the ball. I mean, if you look at what Amazon's done over the last 2 years, they went from an automatic 2-day shipping to, you know, it might take 4 days, 5 days, 2 weeks. They have happy customers, as this chart here shows. They're very high on the scale, but they're, you know, the purchase intent is dropping off, and I think a lot of it has to do with not only the shipping delays, but people are gaming the reviews now. It used to be if you got on Amazon and you saw a 4.8-star review, you were assured to have a good product. But a lot of those are fake reviews, and Amazon has a big problem with, you know, fake products, fake reviews, and slower shipping. And so, you know, Target is doing a much better job on executing, and it's wild because 5 years ago, you know, everybody was scared Amazon was going to kill everything, right? Target, Walmart, Kroger, they were all in their crosshairs. But Amazon maybe just got a little bit too big too fast and couldn't handle what everyone expected out of them. And I think the pandemic really showed Amazon's weakness, whereas it really demonstrated not only Walmart, but definitely Target's strength as well.
Landon also has that little thing called Amazon Web Services that I think it's put a lot of focus into over the years. But I don't think there's much else to be said. I think you've made your position pretty clear here. The price is always going to be the question mark with these names and the run that they've had. Target's certainly executing well. I love the conversation. Thanks as always for joining us, the co-founder of LikeFolio.com. And to confirm what Kevin and Jenny have been talking about, the market agrees with you guys. Target's a consumer discretionary name in the S&P 500. Walmart, of course, a consumer staple. It's very much a secular sell-off today with the discretionary names firmly in red territory and the consumer staples holding in there okay. Amazon, I think it has its position. It's the e-commerce giant. Target's this omni-channel. I love that word. I'm not so fully, I don't really understand exactly, you know, how it came to be that or why that is the name, but the brick and mortar presence and how they've executed on it is its advantage.